Hey guys, welcome back for another video. Today I'm going to be talking about market cycles, and for this I'm going to be using the chart of Bitcoin Cash, but this applies to most of the charts within the crypto industry. Usually markets within the same industry tend to move together. For example, tech stocks tend to move together. When they go up, they all go up. When they go down, they all go down. Same happens with precious metals, for example. Gold, silver, when they go up, they all tend to go up. When they go down, they tend to all go down. And same happens within the crypto industry. When some cryptos go up, all go up. And when they go down, they all go down. So I'm going to be using the chart of Bitcoin Cash because I haven't talked about it for a long time. And I know I have a lot of followers who are interested in Bitcoin Cash. But this applies to any market within the crypto industry today's. Also, I think it's very important to talk about market cycles now and then, because we crypto YouTubers, usually when we release videos, they are time sensitive. So they get viewed only for the first 24 to 48 hours, and then no one else watches the video again. So because market cycles are this specific topic, market cycles, it's actually not time sensitive. This repeats over and over and over through history. I think it's important that I talk about, in my channel now and then, so that more people has the chance to watch it and to learn about it. And especially because within the crypto community, many people knows this picture. It's called the Wall Street cheat sheet. You can find it on Google. And everybody knows this picture, but guys, I believe most people don't actually apply the knowledge. Most people know it, and most people understand it, but they actually don't apply the knowledge. So knowledge, if you don't apply it, it's useless. Like you're not gonna get anything out of it unless you actually apply it. If you guys followed my channel for long enough, you will remember, guys, I was, before we topped at the end of 2017, I was describing the top. I was describing how the top was going to be and how I would probably be able to spot the top when the top was there. I started to talk about that in, I think in November, at the end of November. I said, the top will be, I don't know where the top will be, but I know the shape, the pattern that it will form. So I don't know how high the top will be, but I will be probably able to spot it because of the pattern that it will form. And it's exactly the pattern that you see here in the Wall Street cheat sheet, which is the last parabolic move, and then it crashes, it bounces hard, but it doesn't make it to the previous all-time high. Then it crashes again, another hard bounce, and then is when we enter the crash phase. And that's exactly what happened. Here, this is Bitcoin Cash, but you can see the same or very similar in Bitcoin, Ethereum, and any other. So last part, it goes absolutely parabolic, vertical, it crashes hard, it bounces, here it bounced up to 3,300, near the all-time highs at 4,000. It crashed again, one more bounce, and then the crash phase. The reason I was able to describe this before it happened, it's not because I'm super smart, or it's not because I can see the future. It's not because I came up with this theory by myself. The reason I knew is because I studied market cycles before. I knew about market cycles from before. And you really don't need to be super smart to know this if you only study history of markets. So if you just follow this Wall Street cheat sheet and use it as a map, you will be able to spot the tops every time they're there and the bottoms every time they are there. If you just look at this picture and compare it to the current situation here in Bitcoin Cash, you can see very clearly we had the top of the cycle here, not exact, but very similar shape. Then we had the crash period, and then we had capitulation, and then after that we had depression, and then after that we entered the hope period when we went from about $70 to about $500. after capitulation here. So this was capitulation. We can see the spikes of volume here on TradingView. We don't see the volume here on this picture, but you can see the capitulation and price action here, and the anger phase and the depression phase when it stays down and low for a long time. And then we had the rally where everybody says this is a sucker's rally and it will fail like all the others during the bear market. And then we enter the hope phase here. So this represents that this finishes here and it starts back again here, because cycles repeat over and over and over. So I believe, following this map, we are moving from depression phase into hope. After we've gone from $70 to 500, many people started to be hopeful again. So now we have a little bit more bulls in the market, because here during depression it was like 90% was bearish sentiment, and now the sentiment is more neutral, which I personally read it as we are moving from depression into hope phase of the market cycle. We've been going sideways down here for a very long time now. So I believe we are moving from depression into hope. Now, the most important takeaway of this cheat sheet here is this little picture that you see up here. You see, this is like a simplified market cycle, right? It says you don't see the candles, you just see the cycle going to the peak, and then down to the valley, and then up to the peak, and it repeats over and over. When we are at the peak, at the top of the market cycle, it says here, this is the point of maximum financial risk, which means you don't want to be buying anywhere near when you see the thing going parabolic and when you see the sentiment thrill and euphoria. So you don't want to be buying here because it's very, very risky. It's a point of maximum financial risk. And when we get to the bottom, and you can actually spot the bottom on the chart, it says here, this is the point of maximum financial opportunity, which means now is the time to be invested in crypto with high exposure, because this is the point of maximum financial opportunity and minimum risk, which means, yes, it can always go lower, but how much lower is it going to go? Probably not much more. If it was to go lower, which probably it won't, but if it was to go lower, there's not much room to, how much in percentage are you going to lose if you are exposed right now into crypto with high exposure? How much in percentage realistically can you lose if it goes down? Not a lot, compared as if you buy near the peak. And what is your reward? Your rewards, your potential reward, because reality is no one knows the future, but your potential reward is very, very high, because we are at the bottom of the market cycle. So yesterday, someone in my premium groups asked me, hey Helga, do you think now it's a good time to buy or just wait? And of course, this is going to be the answer is going to be different from person to person, because it all depends on your current exposure right now. If you are already 90% invested into crypto, then you're okay. You don't have to do anything. But if you have zero exposure, the time to buy was yesterday, was any day for the past 10 months, while we have been at the bottom of the market cycle. Of course, these cycles are long. In crypto, they tend to last about 4 years. Next one might be longer, might be shorter. We don't know the future, but we have a reference of more or less 4 years, which means if you invest today or you invested any time during the past 10 months, more or less, since we bottomed here, you cannot expect to get rich tomorrow. This is a 4-year view, right? This is a 4-year plan. So if you have a 4-year time frame, the time to buy was yesterday or any day during the past more or less 10 months. Guys, I hope the video is clear. I hope you guys actually apply this knowledge, because I know everybody knows this picture, but I hope you're actually applying it. And that's all for me. Good luck, everybody. Thanks for watching. I'll see you soon. Bye.